everybody. You have a great guest, Demelza Hayes, pursuing her PhD in crypto blockchain from Liechtenstein. So I'm hoping some of my crypto trader buddies that I've interviewed are in the house for the interview at the top of the next hour. Gold trying to come out of here after a 3 drive right here. That would coincide if the yen has peaked at the 50% retrace level right here. So we've come off it a bit, okay? Only thing I could say is these highs up here were confirmed. Maybe it's a flag for another shot up that could take us into the gap. So, I mean, we didn't even start to enter the gap here. It looked pretty ugly back under this 38%, 1031 here. So, inverse relationship between USD yen and gold. Everyone see it? So if yen has another leg up here towards 111, the metals will too. But I want to just point out even silver, and I'm not long-term bearish, I'm just talking about the potential for a rally in gold, maybe back to this 1285 level, about halfway back. This was a $30 decline approximately in round numbers. Why not 15 back and then 40 lower to the 1240 level? Also, silver, if you notice, is getting back into this falling wedge. Okay, so we had a throw over in silver. Could squeeze some people here as well. And euro pound accelerated. I'm fighting it right now after yesterday actually was successful from the 3 drive up here. We had this and, really accelerated last night. Hasn't really blown out the divergences yet on the 1 hour. Still, these were the confirmed highs. We're not confirming there. On the 2 hour, you could see it's pretty glaring still. On the 4 hour, it's still way under these extreme readings up here. Everyone see that? Also, if the yen is done, another clue would be yields, 10-year yields, and they are down here a BIP.5. So this may have been enough. So I correlate this too with the yen. Okay. So yen rally, yields bump, yen pulls back, yields pull back. So that's a key on that. I've been a bear in crude and I haven't touched it. I know some people that are currently short and it's acting kind of crummy here. We had this failing rally and this is, we didn't quite get to 61.8 here, but it looks like it might be rolling over. We'll see. A lot of it's going to have to do with whether or not the S&P rally is done. I actually thought we might have one more rally towards 2890 or so in the S&P. We're lower this morning. I believe we have Fed minutes. Wow, we're now down 10. Okay. So I thought we might give it a shot up here, 2896, to clean out some stops here. Perhaps it's rolling over or another dip to buy. It's an IDK to me right now. And then a friend of mine was asking me about the guppy, and I said I'd rather see it make a new low here. So you have, a lot of pound weakness, trying to get a little wick, but we haven't taken this low out yet. I'd rather wait to see what happens after they take some stops out there. Okay, so this is where you are. ForexAnalytix sponsoring this free webinar, sponsored by Forest Park FX. If you haven't yet, you could go for our trial. It's $1 for 10 days to have all this at your fingertips. All the research. This is a new feature. Different methodologies, Grega, Andre, Blake. Is this basic technical or Blake technical? I know what it is. Candlesticks and macro. Look at that wedge. Okay, so that's a pretty interesting line. I'll wrap it with a line that I have here as well in euro, which I think it's going to need to take out before you could declare a bottom. The measured move for me, it was like 1050. So the breakdown happened last week off this trend line. And I think to declare a bottom, you're going to need closes over 112. This move here, just a measurement of the move. I just did it from here to here. This move, which was, I think, 220 from the breakdown, or 120, 1120, no, 220. But take it to 109.60. So we'll see. It's definitely stronger than cable. Cable's still under a lot of pressure, diverging a bit here, but not the greatest reading, not over 30. And Dixie, really, this pivot. All right, so yesterday we had that one real bad candle, but look at where it held, everybody. You see that? So really, that's a lot. Oh, okay. Tesla under pressure, $200 stock now. 97.80 is really an important pivot. We start closing back under it, you know there's something else going on in the dollar, and the continuation to above 98.40 has been interrupted. So a very key number, and you could tell, you could have these lines and you only know if they mean something if they react off it, and that was a pretty good reaction. 97.80 was a prior high before we went to this 840 level. So to me, that's key in the Dixie. So Blake, I'm curious as to what you're thinking in here with this board, and I saw your piece on Euro Pound on the chart of the day. Nice look. We've extended over that level. What are your thoughts?
Well, if you look at the patterns in play, I actually established a pattern in play today because I got hit on a Euro Pound short overnight, and I got hit at the 88.05. So anybody that's shorting up here is going to get a better price than me. Where the hell is the thing? Okay, so the Euro Pound is, it's obviously we're above the 200-day moving average. So to me, it really depends where we close today. But you can see here's the 161% extension. We're above it right now. Now, gold's ripping right now.
Yeah, because I covered.
Oh, did you really?
Yeah.
You covered your short, or did you take your long off?
Took my long off.
Oh no! So you took it off, and it's ripping.
Yeah, $1 ago.
Oh well,
Yeah, $2. Oh yeah, 180 ago.
Hey, well,
that's aggravating though, isn't it?
It always is.
I don't feel great today, Blake, and that's why I did it. Some days I wake up and I'm just not with it, and it's hard for me to concentrate when I'm like that. I guess what I could do is just leave my stops in and walk away, not think about it. But I'm too much of a control freak to do that.
Well, it is tough. For me, it's a little bit easier depending on how profitable of a position you're in, and where you're positioned in. And I mean, if it's something that's not yields are just dumping right now.
Yeah.
If it's something that you're not very profitable in, it makes sense just to
so do you buy that relationship, like maybe the yen peaked at 50% up here, and that's what's lighting up the gold here? They kind of move inverse to each other, and yen coming down is part of yields going back down.
Well, yeah, I think so. Speaking of, yields coming down and what dollar yen's doing, yeah, here's that 50%. I do think that there's a strong correlation there. So,
Okay.
obviously, if you're looking at the dollar yen, you're like, okay, it looks kind of toppy here, and we got this bear flag, which obviously
Right.
we do. At the same token, you could say, well, I'm going to be bullish bullish the yen or bearish the dollar yen in this case, and that's it's playing out as you would think. I'm playing it a little bit differently. I'm short the dollar Swiss, but same
Okay.
situation. We have a bear flag formation.
Let me turn off my thing. That's
Turn off your thing.
data flash. I think does the data flash give you those announcements?
No. Well, so what you have
Yes.
to do. Yeah. And hey, good morning, Stelios. I hear you're back from your cruise.
Yeah, good morning. Thank you.
So when you have your data flash, let me see if I can pull up data flash really quick.
I took it off.
Well, what you do is here on this little speaker.
Oh, okay.
Undo Twitter squawk, because Twitter squawk, like it'll talk
I
when
see.
Zero Hedge tweets or FX Street and some other handles that are predefined. I just remove that and I just keep the headlines and release notifications. So
All right, thank you. But you know how technically savvy I am.
Yeah, super. You're super savvy. So Stelios, how are you, by the way?
Hey, Sap.
I am very well. Thank you.
You've got to be very well. I mean, did you get were you on a Disney cruise and got to do all sorts of fun stuff, or what happened?
I didn't. We didn't have the kids with us. That's all I have to say. So
really,
it was good. Yeah.
Oh man, those are the best kind.
And Greece is such a lovely place. It's a shame it's filled with Greeks. It's so beautiful, but there's all these Greeks who are ruining it. But anyway, it's yeah.
That's what I saw on the news last night, Stel. Some island, Samso or something, where all the immigrants are camped out. So, the Greeks feel many Greeks feel the other way.
Yeah, well, I had a good time. Let's leave it at that.
Okay, buddy.
What's happening? What's happening with this pound?
If they feel differently about it, they should be more careful who they vote for.
Yeah. Okay. So, what's happening with the pound? Well, we have Prime Minister May in danger of. Well, we've said this for weeks, but it's not materializing. But she's in real danger of being ousted. There's this committee, which is the Conservative members committee called the 1922 committee, which is it meets weekly, and apparently they're pushing to get her basically to go. So she still plans to bring her fourth withdrawal agreement on Friday. And what differences is it going to have? I have no clue. I don't think anybody knows yet, but she still wants to do that. But the question is, will she still be in power to do that? And to answer the question which everybody or many people are asking, and we've talked about this before in the webinar, is this pound positive or negative? It will depend on who's going to replace her. If we get somebody very hard Brexiter like Boris Johnson, it's probably going to be negative. If we get, I don't know who else we might be able to get, but if it will depend on who replaces her. End of story. So we'll see.
Just to see if it's going to be cable positive. Now, I've got this euro pound short. So that means I'm starting to buy the cable down here. My everything that you said is minus knowing who would replace May is known. So so in my opinion, the pound's at that point where it becomes more of a value proposition. That doesn't mean it can't go down from here. So what I'm more interested in is how we close today. Let's say that Prime Minister May says, I'm going to step down, as of tomorrow. I think we could see a little bit of cable weakness, but depending on who would be taking her place, or the market might feel that this is a positive development, and so you have to be a little careful, obviously, being long the cable here, and that's for me, it's like, okay, I'm willing to take the position, but I'm not willing to risk a whole lot. I look at the euro pound, we might stretch up towards this the 618 retracement. We are above the 200-day moving average, so I think where we close today is going to be very important. Getting the push above 88 pence, and if we close back below 88 pence, which I'm hoping for today, that would be a good indication for me that things are about ready to turn. So I'm trying to play into this this cable weakness, but I've tried it before. It's a tough trade. It's definitely tough trying to be short the or along the cable. Now, one of the things that I wanted to talk about a little bit is this this dollar Swiss, and the dollar Swiss has a bear flag pattern, which I'm actually short the dollar Swiss right now, and it points to below parity, and it points to the 200-day moving average and this long-term trend line. So it actually looks like we're going lower. The question is, what does that do to what you're trading currently? Because I look at the euro dollar, and the euro dollar, we haven't if you just think about this from a just kind of a I'm not an Elliottician. I don't count waves, but I'm going to tell you one of the best traders that I knew back in the day. And it's what's funny about this story is one of the guys that I saw yesterday, a good friend of mine, he owned the brokerage firm that I first started trading at in 1996. So he's a friend of mine. We've been friends for about 25 years. And it was good catching up with him. But one of the traders in our office that was one of the best traders that I traded, his name was Maestro. And the reason why his name was Maestro is he was the Mesa, Arizona Symphony Orchestra conductor at night. During the day, he traded his family's monies. He inherited a lot of money from his family. He lived actually pretty close to where my folks live and where I grew up, and he was a really good trader. And I lost touch with him about 10 or 12 years ago, but he was still trading, doing the same thing. We just lost touch over the years. Anyway, he was really good in just identifying, knowing that the markets trade kind of like, they dance around, if you will, in a rhythm. And when I look at like the euro dollar, I just think of, a rhythm that we're in, and it looks like we're probably basing here, and nothing more than just more of a hunch. But then I look at the daily candle from yesterday. We had an outside day. An outside day usually signals that we're trying to reverse. So and let me give you the reason behind an outside day. When you have a sell-off like you saw yesterday, we sold off, we hit new trend lows, then we pop back up again. And you notice how we engulfed yesterday. Even though it's not a bullish engulfing, it is an outside day. That suggests that we made a false breakdown. The risk now is for higher levels. So if you think about like the dollar Swiss, we got this bear flag pattern, and it looks like we're going to break lower. What does that do to the rest of what you're doing? Well, if the dollar Swiss is breaking lower, that means the euro dollar is probably going higher, which you can see the euro dollar is near its highs of the session. It's almost at new highs on the day. Could that theoretically drag the cable back up again? It could. And what's it do to the rest of your, the pairs? You take the Kiwi, that's the Aussie, sorry. You take the Kiwi, we've got this really severe downtrend that we've been in. Divergent relative strength. We're even avoiding oversold conditions. And we're almost at a 127% extension, 161% extension of that last move up. And my 2 cents are is if we break back above 65.30, which is only 25 pips away, this thing's going to start squeezing. And I'm not a Kiwi bull. As a matter of fact, I think about what's currently happening in the global environment, and I look at equities, coming off, and it's like, is that really an environment for the Kiwi to be rallying? It's not. But conventional wisdom isn't always the right idea either. So, with stocks selling off, is it even possible that the Kiwi dollar starts to rally? It is. I mean, especially if the dollar starts to come under pressure across the board. So this is one of those things that I'm just, I'm thinking about. Okay, the Kiwi looks like it's breaking down. The dollar yen looks ugly. Yields are falling. The euro dollar is near its highs. What else could happen here? Can the cable, everybody already knows what's happening with May, can the cable, reverse course and, get back above 127? I think it's possible. Could the Kiwi, start breaking this trend line? It's possible. You take a look at the Aussie. The Aussie's just hovering around the 161% extension. Is it possible that the Aussie, rallies back above, 69.20? Again, these are, I'm looking around and I'm seeing the risks of the dollar starting to, pull back. And then you have the dollar index from yesterday, the same outside day, false breakout above this resistance. If the dollar index gets back below like 97.80, you got to be bearish. It'll give you a lower high and quite possibly false breakout. And I think the risks are starting to mount for a dollar reversal here. I am short some dollars right now, being short the dollar Swiss, but I'm giving you the reasons why, not necessarily, oh, you should, be shorting the dollar. It's just, these are, the things and the thoughts that are going through my head right now on why I'm doing what I'm doing. And again, that doesn't make me right. It doesn't make you wrong if you're on the other side of that trade. It just, these are the ideas that are surfacing for me. Now, today we do have Canadian retail sales. I do want to point out that the dollar Canadian is weak. We are really key support here. This is the trend line right here at 133.85, where we've traded as low as 80. So I guess you could say it's 133.80 right here. Also, pretty key previous resistance acts as current support at current levels. With Congress looking to make things better with Canada and Mexico regarding NAFTA, there's a chance that the Canadian could start rallying too. The stock market's under a little bit of pressure. If the stock market starts to bounce, could that give the Canadian some juice as well? I think the risk is for a break lower in the dollar Canadian right now. You look at the dollar Mex, same thing. Dollar Mexican peso, or the taco, or Salma Hayek, whatever you want to call her. We have this. You can say it's a bearish wedge. Here's the support. Could we get back down towards? Oh, I didn't mean to move that. Could we get back down to 1880? I think there's a good possibility. So again, these are things that I'm looking at, and I think that we're starting to see the risks of some dollar pullback. So if you're long the dollar, I think you need to be a little bit careful here, and that's the point I wanted to try to make today for those of you that are trading. Now, again, I'm going to reiterate, if you want my analysis, the rest of my analysis, I do all the basic technical analysis, end of day wrap ups. I do a lot of the intraday updates, especially the charts. Amanda, Polly, Steve also contribute to some of the basic technical analysis throughout the course of the day. But the charts that you're going to see here are mostly my charts and my end of day update. So if you want everything on how I'm feeling about all these majors and all the different indices that we follow, make sure you are a ForexAnalytix subscriber. to get that. And then also, you know, I'm in the chat room all day long, which I've been in since, you know, 2 hours ago, and I'll be there for probably the next 10 hours, so at least. So with that being said, I'm going to pass it over to my colleague Steve and Stelios. I heard Steve a little bit earlier. Good morning, Steve.
Good morning, Blake.
How are you doing?
I'm good. How have you been?
Good. And Stelios, let me ask you this: are you hungover? I mean, if you didn't have your kids with you, I mean, if it was just you and your wife, that usually equates to me that I probably was drinking some sort of alcoholic beverage at the same time.
No comment, Your Honor.
Good one. Yeah.
All right. Well,
give him a breathalyzer, Blake.
I'm just hoping you took some ibuprofen.
Yeah. Go get him today, Blake. And you know, guys, that when you become a member, and I tweeted this yesterday, wouldn't you like to be able to ask Blake a question after he leaves now? You could
because
do it.
That's I'm in the chat room and people talk to me all the time and, you know, ask me
see his charts, trade alongside Blake and the other pros in the room. You know, it's invaluable.
All right, guys. Well, hey, have a great one and good luck today. And I'll talk to you all soon.
Thank you, Blake.
Thank you, Blake. Thank you.
Good luck, Blake.
Okay.
Hello, Stelliosis. Sounds like a disease, or.
I miss you guys. Okay.
Yeah, we miss you too, bro.
Yeah. Okay, so a couple of things before the Canadian data. Let's start with the data we had already. We had Chinese industrial production, retail sales have both missed. So this continues a trend of misses out of China. We've said it before, you know, how confident can we be of those numbers? Relatively, but not totally. So, you know, taken with a pinch of salt. We did have UK CPI, which is very important, and CPI jumped back up above 2%. It printed 2.1% year on year, expected 2.2, so slight miss, but really right around the 2% target that the Bank of England has set. Now let's remind ourselves that the average earnings growth is well above 3%, so that gap is still healthy and is still good. But clearly this is overshadowed by what's happening in the political scene of the UK. And we also have quite important, we have the FOMC minutes tonight or later today. And we have to remind ourselves not to get carried away, because the classic error is that we get some headline or something which is you know, could be more hawkish, let's say, than expected. But we have to remember that this was from 3 weeks ago. A lot has happened since then. It doesn't mean that this is based on something that's happened over the past few weeks. So in this example, we've had the US-China trade talks failing. But if you remember from the previous meeting that these minutes are coming out of, the main event was the fact that Powell talked about the transitory factors that are impacting inflation. This is something that the market was not expecting that much. And if you remember, the dollar gained on the back of that. It caught the market a little bit by surprise. And on these minutes that we're going to get later today, we might get a little bit more context on this. So we might get a couple of headlines talking about the transitory inflation factors and all that. Let's not get too carried away. It's not things that they're saying now. They said this 3 weeks ago. So just to keep this in the back of our minds. But the main point is that the market is still pricing around one cut for this year and another cut for next year. So, you know, it's still a hurdle to meet. To get these two cuts. It could well happen, but I think in the very, very short term, the risk is probably that the market might get a little bit, might be a little bit ahead of itself, and you know, on any kind of headline that we get today on the FOMC meetings regarding inflation, maybe the dollar will jump. I don't know. I am still long term a bear in the dollar, but in the short term, obviously anything can happen. So. Just to keep this in mind, what the market's pricing in and what might happen the next year or so. So we have 10 seconds for Canadian data. Steve, are we looking at USD CAD VR? And okay.
Yeah.
Oh, big beat and revision beat as well.
Indeed. Here are the data as well. Let me bring them here. There you go.
Yeah.
1.1 versus 1 forecasted, 1.7 core retail sales versus 0.9 forecasted.
Yes.
And revision 1 from 0.2 and 0.7 from 0.1. So yes, very positive data. Whoop.
Yeah.
I didn't
Crude
do that.
is not doing well today, so that's probably supporting a little bit USD CAD, but this data was good, no doubt about it.
Yep, indeed. So we see that USD CAD, remains under pressure. Having said that, it still holds within this ascending channel. You can see it here. So yes, we're pushing towards the lows, but is this some kind of a technical event? We need to talk about. Not really, not yet. We are currently testing the 61.8 of this move higher, and even if we break below it, then we have a confluence of supports roughly at 133.30, and the ascending channels support is converging to that same area as well. So USD CAD under pressure, yes, but nothing really, no real event from a technical perspective yet. So far, we have this 135.20 area. You can even view this as a double top. Now, if that's the case, we should extend lower from here. And that's it. Personally, I think that you should respect this ascending channel. So, I won't be selling here. First of all, we're on the 61.8, as I said. Second of all, we're not far away and there is no risk reward towards the channel support. I think you either buy lower, so towards the 133.30 area, if you like the dollar to the upside against the Canadian. Otherwise, if you like it to the downside, I would rather wait for a breakdown from this channel before actually acting on it. Stelio, we've seen the extreme weakness. I mean, what better example than I think today so far it's the 13th consecutive up day for the euro pound. And that's mostly due to the pound moving. I know that you briefly talked about it at the beginning. What is your personal feeling about what we're going to get?
In terms of the political developments or Brexit?
Yeah.
Both.
But they're both interrelated, actually, yeah.
Well, I've said this in the past, and if you go to ForexAnalytix and look at the macro bias for euro sterling, it's been bearish for some time now, simply because I think that the only scenario where euro sterling, where the pound's going to really suffer, is a no-deal Brexit. We've said this many times, and I don't know how exactly, but I think this is something that neither side wants really. The EU people and the UK politicians, they don't want.
Neither side wants. Okay, yes. Understood. But sometimes we've seen, bad divorces, for example, if we're talking about real life situations, nobody wants a really bad divorce, but we get them so frequently. So the question is,
if you have divorce proceedings and both sides want to settle, then they're going to settle. So I think eventually they're going to. I don't know what kind of solution is going to happen, but I think a no-deal Brexit will be avoided, and that's, in my opinion, that's really the binary event. No deal or something else. I think no deal is going to be avoided.
Can you guys use a different metaphor?
I've been divorced once, so I know what it's like.
Okay.
Okay. Yeah, so that's my opinion. It's and also, what's the market pricing? Like Blake said before, the time to be short the pound was before the referendum. Really, that was the time to be short the pound, because the
risk reward was amazing.
Yeah, the market was pricing. A very low chance of this happening, and it happened. And then the pound depreciated 15% from the top. And now we've got to a point where I think, especially against the euro, and I also like against the Kiwi, once we get a nice pullback, I want to be long the pound again. Those two, I'm looking at 0.0 0.9 in euro sterling to start shorting again if we get there, and somewhere around 190 for sterling pound kiwi. But my humble opinion is that.
So you're looking quite lower from here then.
I'm not saying it can't go lower. It might do. You know, this turmoil and all that. You know, you don't know what's going to happen.
To be honest, the technical picture for both of them doesn't show any kind of structure that somebody would expect to see a reversal from imminently. I mean, the price action looks very bearish at the moment, and you know, and quite impulsive if you want to talk from an Elliott wave terminology, right?
Yeah.
So I would remain very, very, very careful, because it looks to me like the pound wants to move lower. I mean, I can easily count even on the even on the daily chart. I can easily count 5 waves down. 1, 2, 3. Yesterday's jump as a 4, and probably a 5th wave. So what that would tell me? And speaking of which, since we're counting waves, let's have a look at what Greg is thinking about the pound. Let's give a freebie here. Let's go on the daily.
Which reminds me, Steve, is there a way we need to give a function where the data flash can stay always on top? I really don't like it when it gets, you click on the platform and it goes behind. But anyway, something
to...
but
for people with a single screen, that would be a big problem, Celio.
Well, I have a single screen right now, and I would like it to be always on top. But anyway, okay. We can talk about that. Sorry. So what's Greg thinking?
Here it is actually. 4-hour chart. There it is. So yeah, there you go. Exactly what I showed you. It's a little bit. This chart is probably like from yesterday or something. So he predicted this little jump from what I see, which hadn't happened already, and now we're on a 5th wave down. And as you see, nice extension for this 5th wave is towards like 125.50. The market is currently 100 pips above. Personally, I like this area roughly, not far away from where he's looking, 125.80. Why? Because 125.80 is the 78.6% fib from this spike low to the recent high. It's also a horizontal support resistance area. So, I also see the possibility of more weakness ahead before seeing some kind of a jump. But to be honest, I wouldn't expect an impulsive jump. I would expect some kind of a correction. In which case, I would expect that 128 is not going to be an easy level to crack to the upside. That's my personal viewpoint. And for Euro Pound, you can see the exact same kind of structure. You can see 5 waves higher. You can see a very, very impulsive move after bottoming there. So no matter what, I would expect. This is actually what we drew yesterday. Expecting a little jump, which happened immediately afterwards in the webinar, and then a continuation lower, or a worst case scenario, a bigger jump which didn't come. And this is the situation. So I think we're headed there. Now after that, we can definitely rebound, but would I be actually buying that rebound or selling it? I would be probably selling it if I wanted to do something with it. Now, with one thing I agree 100% with Blake on is USD Swiss, because I do think that this jump higher in USD Swiss is corrective in nature. I mean, the structure is quite clear here. So I would indeed expect, I like his pattern in play, and I do expect that there is a high chance of a continuation lower from this corrective form. And of course, that would also imply perhaps a rebound here in the Euro USD. By the way, keep in mind, and it's always nice to watch these divergences, that USD Swiss, the inverse of it, was diverging with Euro USD, which was a good sign as well. So I do like USD Swiss to the downside. I think that USD Swiss can target parity to begin with, if not lower from there. So that's my point of view, and I wanted to speak about that. I know that Blake already did, but I just wanted to reinforce his point of view on that, because I 100% agree with that. Now, having to do with what that would imply for the DXY, yes, that would imply a weaker DXY. Now, ideally speaking, and let's go on the daily chart here, ideally speaking, you would even want to see a fresh high here in the DXY to retest this ascending channel. You can even, you can even see this as an ascending wedge if you just take a smaller part of it and you draw a trend line. But that doesn't necessarily mean that it's going to happen, right? So one thing is for sure, DXY remains bullish, but the lack of momentum is very, very telling, and I cannot ignore this lack of momentum. By the way, I see today unexpectedly few questions. We usually have a lot of them, so if you want to ask something, go ahead and do so. Now let's have a look at the. Okay, as you see, USD CAD is pushing towards the lows. No surprise there, since the dollar is retreating a little bit, and Canadian data were indeed good. But as I said, watch 133. 133 is a strong area of support. I would not be shorting against 133. It doesn't make much of a sense unless you're a scalper, of course, and you want to just take advantage of a small move to the downside. But that's not my cup of tea. Now, having to do with another pair that we talked about yesterday. If you remember, yesterday I made it very clear that, in my opinion, the USD NOK was a good opportunity for people that wanted to have a nice risk-reward trade to the downside. Since 880, 882, this little area has proven to be extremely hard for the market to crack. If you actually took that kind of a trade, you're now in a free trade, because you can move your risk to break even. With yesterday's candle, we actually had an evening star formation here, which is usually a nice reversal signal as well. I think with a move below 870, we can then expect a continuation lower towards 860, which is the next area of support. At the same time, because we know how much they relate, we see that crude is under pressure, which shows that if crude for some reason rebounds, USD NOK can move lower, and USD CAD can move lower even with a stronger momentum. Now, the question is, do I personally believe that crude is going to rebound from here? I have to say that I'm very skeptical, because I think that this rebound higher looks to be in a corrective format, and especially if we break below this little channels ascending trend line support, which currently passes, let's say, from 61.20, I would expect another leg to the downside to at the very least, test 58. Okay, at the very least, I would expect another leg lower towards 58, and this remains my main case scenario. Okay, so that is one factor that would make me skeptical with a short trade in USD CAD, since USD CAD support comes in like 60-70 pips from where we currently stand, and it looks to me that crude can accelerate to the downside to move from 62 to 58. So for these two reasons, I would caution people very much against trying to short it here, not unless we break 133, and I'm talking now about USD CAD again. Okay, now having to do with the metals, nothing has really changed since yesterday. As you know, I very, very rarely pay attention to what happens to short-term time frames. So I mean, Blake was saying before that gold is ripping, and by gold is ripping, he meant, if we go on the 4-hour chart, he meant this. I know that Blake is scalping the market very often. So if you look at this on a 30-minute chart, on a 1-hour chart, it looks like a decent move to the upside. But personally, watching the market at minimum on a 4-hour chart, it doesn't mean absolutely anything to me. So I have to reiterate here, gold seems rather weak. Yes, I would not be selling it as long as it holds above 1265, because 1265 has acted multiple times as support. So there's no risk reward to be short the gold, close to 1265. There's no question about it. So put a gun to my head, would I be buying it or selling it here? The answer is I would be buying it as long as we remain above 1265. But the fact remains that it seems quite weak, and silver even weaker than that. Silver on a daily closing basis has held this 78.6% pip very nicely, held like a champ, as we say, but nothing from this price action yet is hinting to any kind of a bullish reversal. Not yet. I'm not saying that it cannot happen. It can, but nothing on this chart signals to something like that yet. Another example, a very obvious example, is what's happening with palladium. Palladium was trading within a rectangle. It falsely broke above it for a short period of time, and once it broke just again below it, I said that, listen, this area is the resistance from this point on. We retested it, we broke down, and as you see, it remains quite weak. Platinum, sorry, that was platinum. Palladium is also consolidating, but near the recent lows, so that doesn't look bullish as well. Copper, if you're here, coach, if you remember, I said yesterday that copper is still holding this intermediate horizontal support area, but it doesn't look to me like it can really hold, because the bulls are not really. Yeah, it was. I mean, the price action was very telling. We attempted a rebound from this area, but it was so weak, and then we were barely holding to this area. And you know very well from experience that when the market is so weak and it barely manages to hold a support, usually the next move is that this support is going to break, and this is what has happened. So in my opinion, the next area of support, I don't see anything really in between this level and 256, let's say, which is quite a strong area of support. You see, we've actually bottomed there twice when we were building that rectangle. So I do think that copper looks like there is more downside, more follow through to the downside to come. What are your thoughts on SPX medium term? Okay, good question, and we can have a look at the indices. This is what I drew several days ago about the SPX, and I still think that it's the likeliest scenario. Now, of course, you need to respect the uptrend. Okay, so would it surprise me if actually this was the first leg of another move higher, and this little move lower is a corrective move, and we thrust higher from here? No, it would absolutely not surprise me. But ideally, even if this is a correction, I would want to see one more leg lower, and even more ideally, I would want to see a retest of this area here to, in essence, complete what you expect from an ascending wedge that breaks down, which is a retracement, a full retracement of the wedge. So, at an ideal world, I would want to see a move down here, even if this is a correction, and then a resumption higher. Now, it's always important to ask yourself, what is the level at which I would view the market from a different pair of eyes? So what is the level at which I'd say, yeah, there's no more downside coming? Here's the 4-hour view, by the way. What is the level at which I would say, okay, I don't think there is any more downside coming and we're actually moving higher? I think that a move above this 61.8% fib, roughly just below 2,900, is going to be quite a strong signal that we're headed to new highs. Below this area, I think that the risk reward favors short positions for a retest of this low, as I said, towards 27.30. That's why I'm still holding 2/3 of my S&P short. Of course, I would ideally want this to play out soon, okay? Because the longer we wait without breaking down, the higher the chance will become that we're not actually going to break down. So I would ideally want within this week, so today and tomorrow, to see a continuation lower from here. Okay, so that's my point of view, and doesn't really change if you have a look at the rest of the US indices. So, for example, the Nasdaq, more or less, the same deal here. The IWM, same deal here. The Dow Jones, same deal here. This rebound here might be, just a corrective move of the first leg lower, and then, need another leg lower from there, something like this, before we can actually move higher. Now, if we look at foreign stocks, the DAX, for example. Now, the DAX is still holding this up channel. So, this is something to consider. So, for example, if I had to buy one index at this moment in time, it wouldn't be the S&P, it would be the DAX, as long as it holds above 11,800. Okay, because it clearly still holds this ascending channel, which obviously keeps it in a bullish, at least in the medium term, in a bullish trajectory. And as we've said multiple times, 11,800 is a very key level for the market. FTSE, not as good looking as the DAX, because it has actually already violated this. A little bit more complex, so I'd rather go with the DAX. Nikkei rebounded from this horizontal support area, but so far I'm not really getting inspired from this rebound. And even if we have a look at the USD yen, personally, I'm still not convinced that this rebound higher in the USD yen is anything more than a corrective move to this prior move lower. So I would still, if I had to do something with it, I would still favor one more leg lower towards at least this long-term horizontal, symmetrical triangles support. Now, does this mean that I would trade? No, I wouldn't. Why? Because we're in the middle of this symmetrical triangle, and being in the middle of the symmetrical triangle and not in general being a short-term trader, I would rather just do nothing with it. Okay. But if I had to do something with it, I would actually short it with a rather tight risk from where we currently stand. If your crude expectation is correct, this means Euro USD will break 110 at first, says Konstantinos. Costa, first of all, happy name day for yesterday. Unfortunately, I didn't even manage to call people yesterday. So happy name day. And yes, it is still a possibility. As I've said multiple times, I know that I said that I like USD Swiss continuing to the downside, and that's the case. If I had to take a position anywhere on the board in US dollar terms at the moment from the popular currencies, that would be, short USD Swiss for a short-term trade. So I agree with Blake on that. I do see a divergence here in the Euro USD, but as I've said multiple times, I'm not really convinced about any kind of Euro USD strength unless we break above 113. So yeah, we remain below 113, and as long as we remain below 113, I keep at best a neutral bias, at best, because considering that the Euro USD has been in a downtrend since February 2018, because we have a series of lower highs, you have. I can't blame anybody for saying I'm bearish the Euro USD, right? I mean, it still ticks all the boxes for a downtrend. Now, of course, the lack of momentum and the divergences I see are troubling. But does that mean that it can't push lower once again, for example, to retest this trend line, or even overthrow it for a little bit and retest that horizontal support area before actually producing a larger move to the upside? Well, it can actually happen very easily. I mean, I can easily envision that. So yeah, it is a possibility. It is a possibility. Plus, the usual correlation between the two of them is in general working, but that doesn't mean that we can have short periods of divergence. So, my initial answer is assuming that this correlation is going to be working like nonstop, which, you can always have some windows, some market windows of a few days that for X, Y, Z reason, you get a divergence between correlated assets, right? So for all of those reasons, I'd rather not think so much about this correlation. Anyhow, I currently have no stakes in the Euro USD trade. I only still have a short crude position, which is in the money. So, I'm now managing my profits in essence. So, no reason to overthink it as well. He says, I see the same 109, 112, 107. Yeah, might actually be the case. I mean, if you remember one thing I've made very clear here on the show, because I know it's not your first rodeo here, I've been saying since a long time ago that my favorite position in the Euro USD is not being in a position in Euro USD, right? And I've been vindicated because actually so many people have lost so much time, so much, they put so much effort. They've gotten so much frustrated in thinking in many different occasions that we might get something happening here. And so far, for so many months, we've gotten absolutely nothing out of it. So I'm really, really glad I got to stay out of it and not get myself involved. Once I see volatility picking up again in the Euro USD, and once we start getting some technical levels gotten taken out from the market, then I will reconsider, because I am a believer of what we call mean reversion, and I think that you can even be looking for mean reversion in terms of volatility. So, for example, Euro USD has had extremely low volatility for such a long period of time. So I do think that at some point we're going to be compensated by getting perhaps a period of time that the volatility of the pair is going to exponentially increase, even if that's a short period of time. Okay. Euros at the top of the triangle on the weekly. Let's have a look at it. And speaking of which, thank you for reminding me, because I wanted to actually show. So, Euros, as I said yesterday when we were discussing this with the coach, as long as we trade above 161.20, I really have no bearish thesis to make here, right? You can see why, because 161.20 was the resistance area of this rectangle. We broke above it, we came down, we retested it. Now, I know that we're a little bit overdone, but why would I be shorting against 161.20? We're so close, right? So if you like it to the downside, I would want to first see a move below 161.20. But thank you for reminding me of the crosses, because what I wanted to actually show was pound kiwi. Why? Because pound kiwi is now, if you remember, we spoke about pound kiwi several days ago when I said that, listen, we might have had an overthrow in this from this ascending wedge to the upside, but for me to in essence turn bearish this pair, I would want to see this ascending trend line support break down, and even better, at the same time, this horizontal support area breaking down. So I just wanted to stress that the pair is currently testing this support. So I think people should be really careful, because if we actually move below 193.60, let's say, I think there is going to probably be an acceleration to the downside, and potentially we might then make a run for this long-term ascending channel support, which, as you see, is a lot lower. So I think there is a very, very, very healthy risk-reward opportunity, even if you wait a little bit between comparing, where the fresh highs are. But of course, you can even decide to even keep a tighter risk reward here. So, for example, on a breakdown, perhaps you can place your stop loss above this spike that we had yesterday, and aim for this area next, this 189 area next, as you see. So the risk reward, you can even see it by the eye, is quite appealing, right? It's roughly like 2-to-1. So I do think that pound kiwi is at the precipice of breaking down, and that's quite an interesting trading opportunity. Steve, so you're in the big bearish pound kiwi, because it's clear on a nice risk reward for a long entry. Yeah, I totally agree with you, Martin. You like it to the upside, that's exactly the area you should be buying it. That is exactly the area you should be buying it against, for example, this low. Because if we break this low, 193.43, then we have, for the first time after a long period, the first lower low, right? So we break the series of higher lows. So you like it to the upside, this is where you buy and you have a very tight risk reward ratio. If you like it to the downside, then you wait for this breakdown and then there is a lot more downside to come. Okay, coach, I know that it's a webinar time, but there's a question about pound CAD, and I actually wanted to show pound CAD because pound CAD has had a very, very strong move to the downside. And yeah, and I knew that pound CAD is also at a very interesting level. Why? Because I was monitoring this expanding triangle, and as you see, we're getting very close to support. So same situation here with the pound CAD. You like pound CAD, the upside, you buy it here, you put a stop loss, let's say somewhere at 167 roughly, and you aim, at least for a retest of this area. You like it to the downside. If we break this ascending trend line support, I think that's quite a nice bearish development. You can then expect another leg lower. This was one leg lower. This was, in my eyes, quite a clearly corrective move to the upside. So why not expect an extension lower towards 160, right? So, coach, thank you. Enjoy the interview.
You're very welcome, Steve. Thank you.
We'll be back tomorrow. Oh,
okay.
Coach.
Oh, yeah, go ahead.
Yeah, two things. First of all, if you have noticed, guys and gals, 2 p.m. Eastern Time started this Monday. Polly has like a 15-minute webinar called the Daily Roundup. You can register and monitor that live, or you can view the recording afterwards, which in essence, its sole purpose is recapping the developments and the price action of the day and preparing people for the Asian session ahead. So I strongly suggest you watch that. And also, one more announcement, we're going to be having a Memorial Day offer that is going to be available starting on this Friday, and for very few days until the 28th of the month, so 24th to 28th.
In celebration of my birthday, this promo.
Exactly. Celebrating Dale.
That I came to Earth.
Exactly.
66 years ago, I came to Earth.
Okay, I'm waiting for you to add another 600 years so it can be 666 years.
Oh gosh, yeah.
Yeah.
Sign of the
beast. You little devil.
All right, so take advantage of those two things. We're going to
let you. Yeah, we're going to let you know about details tomorrow, about the offers details tomorrow. But as I said, it will be available to you starting Friday, European hours. And don't forget to watch Polly's Daily Roundup. Okay, if you want to have a sample of Polly's Daily Roundup, you can just go to the ForexAnalytix channel on YouTube. As you see, everything has been arranged in categories. Here you can find the 2 daily roundups that we had so far. As you see, they're like roughly 20 minutes. You can watch one of them so you can get an idea of how they are. So that's it. Thank you, Coach. Enjoy the interview.
Okay, buddy. All right, Demelza. Really looking forward to meeting you and talking to you. I'm making you the presenter now. So you'll see a drop-down menu for us to hear your voice. And I'm not sure if you're going to be sharing a screen. If not, I'll show your web page.
Okay.
Hi, Demelza.
Hi, thanks for having me on.
Oh, really a pleasure and an honor to meet somebody that would pursue a PhD in crypto. So are you going to be sharing a screen, or I'm just going to be talking to you?
Let's see.
Show something.
We can look at, I can share my screen. Also, I can do webcam.
Well, you're on the webcam, So screen share is a drop-down menu, and there we go. So we see your crypto research report.
Great.
Beautiful. All right, Demelza. So, you know, give me a chart and I could trade anything. Okay, even crypto, because I'm patterns. It doesn't matter. Only the title changes for me. So this really isn't my bailiwick, but I do have friends. A good friend of mine, Scott, who was an early adopter of Bitcoin and also a Bitcoin miner, helped me out a little bit so I could ask some questions of people that are truly deeply involved in crypto. I'd like to start off with, in your endeavor in education, what attracted you and drew you to wanting to specialize in this area, so that your handle says it all at Crypto PhD?
Well, actually, it's that's the reason I actually moved to Liechtenstein as well and got into crypto. Basically, my family raised me on the ideas of sound money. So I come from a long line of gold bugs, and when I grew up, of course, gold wasn't very useful for me. I can't use it to buy anything. It doesn't earn me a return. And when I found out about gold, Bitcoin, I thought, well, this is all of the properties of gold that I love. Plus, it's digital. It can travel with me, and it's mobile like I am. And for me, it was the perfect fit. That was in 2013, and I've basically spent every day since then learning more about this topic.
Okay, are you price sensitive to what happens in Bitcoin? I mean, we've had several parabolic moves over the course of its history, and then pretty good givebacks, about 70% quite a few times, including from last year 18,000 to about 3 in big round numbers. Are you one of those people that it doesn't matter, HODL, hold on for dear life, and you don't trade it? You don't trade it, and it's just a core holding, and perhaps the only time you use it is in transactions?
Yeah, well, let's see. Good questions. I don't use it in transactions because then I'd have to recreate my position again. So I don't spend it. I do hoard it, and I do hodl. However, I do some trades in and out of Bitcoin if I think that the market is turning. So, for example, like you said, we have had 3 bear markets in Bitcoin with losses of over 80% in the past decade. And during those times, it is convenient to go into a stable coin that is pegged to the dollar, or into a stable coin that's pegged to gold, so that you can retain value during the bear market.
Oh, interesting. So you don't have to liquidate, or you could just move to a coin that's going to hold up better than Bitcoin. So, that brings me to a tagline that you had in your last report. Only when the tide goes out do you discover who's been swimming naked. So who's not wearing their bathing suit out there in this altcoin world? A lot of people, it was a mania, and the tide did go out when Bitcoin dropped from 18,000 to 3. So why don't we talk about what's held up and survived, and what was really just a promotional fad that raised money for people and really did not serve a purpose?
Yeah, good points. Good points. Well, definitely, I think one of the big fads that we saw get washed away in the last bear market was the fad of initial coin offerings. Okay. So this is basically the process of companies that think they can offer an improvement upon Bitcoin, and they launch a new coin, and they sell those tokens to initial buyers in the same way that a underwriter would sell a new public offering to investors during an IPO. And then the coin is traded on a cryptocurrency exchange in the same way that eventually stocks get traded on secondary markets. And I think that at the time, everyone was really excited for this because the Bitcoin had an unprecedented bull run of 1,700% return in 2017. And people were very excited, and they wanted to invest in the next Bitcoin. And I think that what we saw over the past the last year during the shakedown, it was basically people were asking, wait, what am I actually getting if I buy this? What can I actually do with this digital token? What does it like? What is its purpose? What is its utility? And I think a lot of people were unable to answer that question. A lot of development teams that released tokens were unable to answer that question. And so now what we see in the market is we actually see a decoupling between Bitcoin and the altcoins, where if you track the entire market in US dollars, it's actually everything's green, everyone's going up, everyone's excited. But if you actually track the cryptocurrency market in terms of Bitcoin, you actually have losses in many of the altcoins right now, and Bitcoin is shooting way above the others. So we have this decoupling finally, where the altcoins are starting to get lose some of their support.
Okay, so the blue chips are Bitcoin, Litecoin, Ethereum, just to name a few. Let me ask you this. We've had a very nice rally from 3,200 up towards 8,000. Is this, in your view, I know it's a tough call, the beginning of another bull move in crypto, or just a bear market rally in your view?
Well, I think this is the beginning of a new bull market. There's two reasons for this. I mean, basically, we've had, a sustained increase in value since the trough in December of 3,125. We're up over 80% since then, and it's sustained. Even during that time, we've had lots of negative news come out, and I think there's two main reasons for this, causal reasons that are fundamental reasons for this increase. One is, of course, the Bitcoin halving will occur in 2020 in May, so this is less than a year from now. The reward that is released every 10 minutes by the network will drop by half.
Okay,
And
so
the second reason is
decreases the supply for novices. That's going to decrease the supply of Bitcoins by 50%, which if you have the same demand, that should really drive price, right?
Exactly. If we just take supply and demand, basics of supply and demand, and we see that if we assume that ceteris paribus, the demand is constant, now the supply is halving, the inflation rate is halving, we should see an increase in price. And actually, if you look at the last two halvings, so this is the second time this has occurred. Originally, when Bitcoin was first minted in 2009 or mined in 2009, you had a release of about 50 Bitcoin every 10 minutes. In 2013, that dropped to 25, and then in it was the summer of 2016, it dropped to 12.5, and now next year we're going to drop to 6.25 Bitcoins released every 10 minutes. So I would say that is one reason that Bitcoin and Litecoin are performing very well, because the Litecoin halving is actually going to be this year in August.
Okay. In your report, you noted investment strategies that combine gold and crypto. You mentioned it just a little while ago. What are the top three that you've uncovered? Any of those in South Korea? And what about Samsung? This comes from Scott.
Okay. Well, thank you very much for the question. The question is, what is the main strategy for combining Bitcoin and gold? Or
what are your top three that you've uncovered for that strategy that combines gold and crypto?
Oh, do you mean this might be
top three coins?
Top three coins that combine gold and crypto. Okay. Yeah. Well, basically, I have to start out right away. I'm quite skeptical. The largest one right now is the DigX DAO. So this is the DigX DAO gold-backed stablecoin, and I think that they offer some interesting features. Let's see. One of the ones that I also like is Xarum. It's XAURUM. This one is also very interesting. I think this is coming out of Croatia, if I'm not mistaken, but it's also very interesting. Let's see. We have DigX DAO. We have Xarum. And Mark, is there a third stablecoin that we're looking at for gold? Which one?
Voltoro is not true.
Voltoro. Voltoro is also interesting. It's an Australian, but he's living in Germany, I think.
Okay.
Voltoro is probably the third one. But we've researched this quite heavily now at Incrementum because we have a background in gold from writing the In Gold We Trust report for the past 12 years. And the reason I'm skeptical is because basically, you know, the idea of Bitcoin is to not have to trust a counterparty. Now we're having to trust a counterparty to store the gold for us. And there's a lot of risks associated with that. So with these tokens, you need to be able to protect your private keys. So, you know, it's kind of like a more expensive version of an ETF with the risks that your private keys are going to be hacked. So I think we still need to see some progress in this area before it garners widespread adoption.
Okay. Speaking about market participants, Fidelity Investments started a storage of Bitcoin. Have you heard about that? Their planned projects? Fidelity being a, you know, kind of a mainstream investment house coming into the storage part of crypto. Have you heard about that and what it means for this asset class?
No, definitely. I'm actually quite well connected to Fidelity. I have a very good friend there who's working on the digital assets side, who's working on the custodian side, who's one of the decision makers at Fidelity, and I've been very involved, very involved with them, following them, and yeah, it's very exciting news what they're doing. I mean, they're working on custodianship of cryptocurrencies, mainly Bitcoin, and they're also, because they're investing so heavily in Bitcoin infrastructure, they're also considering actually becoming a miner for Bitcoin, which would be a huge move, given that most of the mining, most of the security is coming out of Asia and
Okay.
the U.S. I think that this would be a huge move if the U.S. starts to secure Bitcoin as well.
Okay, and you also mentioned in your report stablecoin project and Swiss crypto vault. Are those pet projects of yours, and any news on those fronts?
So Swiss Crypto Vault I'm not associated with. Basically, the report, what we do is it's kind of like a consumer advisory report. We actually dig into some of the firms that are based in Crypto Valley and based in the DACH region, so the German-speaking regions, and in Europe in general.
Where is Crypto Valley, Demelza?
So Crypto Valley is in Zug, which is a town known for cherry production traditionally. It's in the Swiss Alps.
Interesting.
And I'm actually from the U.S. originally, but I moved here several years ago to basically do regulatory arbitrage, and now I follow the scene here and try to provide some content for people that are interested in who's behind these firms. Are they doing stuff that's above board, or are they doing kind of weird stuff? And one of the things that we're doing right now is we're doing a report on stable coins. A Swiss Crypto Vault is one of the coins that we are looking into. It's a Swiss, basically a stable coin cryptocurrency that's backed by Swiss francs. And okay. I'm not associated with the project. We're just investigating it, basically.
Okay. Well, as we know, the ultimate perception, price is the ultimate perception of market participants. Has Bitcoin's purpose changed over time, or does it still give financial sovereignty to the smallest of minorities? And do you think that will change with a Fed coin? So that's a big discussion that governments and nations will adopt their own. So do you see that coming? And has Bitcoin's purpose changed over time, or does it still maintain the integrity of its initial mission?
Oh, great questions. Yeah, I actually gave a talk at the Cleveland Fed last summer about this topic, and there were several presentations by Federal Reserve members about FedCoin and how that would work. Of course, this is definitely in the research stage, and they have 4-year and 5-year and 10-year plans for this, and there's nothing certain. The U.S. is actually probably going. They have each regulatory agency in the U.S. is releasing different guidelines, sometimes contradictory. We had Congressman Sherman this week requesting for a bill to ban all Bitcoin and cryptocurrency purchases by U.S. citizens because it questions the power of the dollar.
Yeah, hegemony. Big challenge. Yeah. Go
The
ahead.
hegemony of the dollar, exactly. On the other hand, we've had regulations by FinCEN coming out this month that gave guidelines on to how cryptocurrency wallets and custodians and everybody should behave. So it seems like they're somehow trying to accept them within the regulatory framework in the U.S. I think overall, Europe is actually looking more east than west right now because of the regulations in the U.S. and the uncertainty there. But overall,
Oh yeah, we had the Baton Death March of foreign exchange brokers here after Dodd-Frank demelces. Yeah, a lot of people have left the U.S. because it's just too expensive to do business here.
exactly, and that is a very good point. I think that is one reason, I really support Fidelity, because they're probably the only ones that can afford the compliance cost of actually doing a large scale cryptocurrency product in the US. Any small firm will not be able to afford that, in my opinion. But going back to the integrity of Bitcoin's initial goal to make, give individuals sovereignty, I think that has not changed at all. I think originally the idea was to create a digital cash, and a lot of people say that Bitcoin is more like a digital gold and it's too expensive to use in daily transactions. And I do have to agree with that. However, I take a little bit of a different opinion on this. I think that if you look at, for example, the US, they have like 5 times the retail space than the next country that has the next largest retail space. And whenever I'm in the US, there might be one shopping mall that's has the glitter and gold, but all the other ones are, empty, and
Yeah.
most of the stores are closing up. And actually, I think that
they've been Amazoned.
yeah, they've been Amazoned, and I also think that, well, people are running out of money because they lost the purchasing power over the past 100 years. But also,
Okay.
I think that what we have is I don't think we would actually be buying coffees every day at the gas station if we had a deflationary currency like gold backing our monetary system. I think we're incentivized to spend tons of money on little products here and there because we have inflationary money. So I think that actually a system that would be based on Bitcoin would be deflationary in nature, and people wouldn't actually want to be purchasing these little consumption goods here and there because it would directly take away from their net asset wealth.
Okay, yeah, I've heard that a lot of adopters and people, they really they consider a deflationary environment. They want to hold their Bitcoin and not use their cash. So we've had a test case for this going on, and you mentioned Sweden and their e-krona. Is this really a major test case for a cashless society? And do you envision it would be that way? For example, in India would have been a perfect test case when they outlawed certain denominations of the rupee. So is Sweden the test case with e-krona for having a totally cashless society?
Yes, I do think we're going in that direction in Europe. At the European Union level, at the Eurozone level, they would like to have complete transparency of all transactions so that they can stop any illicit transactions or any tax evasion. However, I think that more kind of entrepreneurial central banks, so smaller central banks, ones that are looking to grow their net reserves, I think that they're actually going to be more likely to challenge this influence from the US and from the Eurozone, from the European Central Bank. And I think that there's going to be some entrepreneurial, clever central banks that actually, adapt to the consumer demand for a better money, a better currency. And I think that there's going to be some more competition between central banks. Some probably will offer just cryptocurrency versions of the current monetary policies. But I think that other central banks will actually improve the offering of their money. So, for example, the Swiss National Bank, they could hypothetically offer a monetary policy that's different from the Swedish krona and attract, if their monetary policy is more desirable, they could attract global demand for their money.
Wow. So, this is a brave new world to me. And, a lot of people have to educate themselves on this, especially, Demelza, to me, a wallet is made out of leather. Okay. So definitely a new age. So how does a 4-year cycle in blocks affect Bitcoin's monetary policy you envision in that future society? So I didn't even know there was a 4-year cycle in blockchain, but maybe you could speak to that.
Sure. I mean, this is a topic of huge concern within the community. There's different coins that have different monetary policies, and they're trying to figure out the best one. Each one is an experiment, and Bitcoin's experiment, like you said, was to have a 4-year cycle. Every 4 years, the inflation rate drops in half, and over time, basically the inflation rate becomes zero. So the flow will become effectively zero compared to the stock of Bitcoin that are in circulation already. And I mean, this is very interesting because what secures the cryptocurrency network, what secures the Bitcoin network, is actually miners that are paid fees for validating transactions. So I know this sounds quite complicated, but effectively, these miners that hold a copy of the database of everyone's account history, account records. So let's just imagine that, if all of us shared a Excel spreadsheet that showed every single Wells Fargo transaction and every single balance in each person's Wells Fargo account, well, each of us would need to be incentivized to update our spreadsheet in an honest way so that we don't just add dollars to our Wells Fargo accounts and print digital money, and so that we can actually confirm all the new transactions that are occurring every day. Well, each of us would need to be incentivized monetarily in an honest way in this kind of open source database approach to money. And the fees for the miners basically drop in half every 4 years, which means that over time there's less and less financial incentive for these miners to act in an honest way for securing the network. And this is definitely a big concern because that is the only value that there is here. The minute that the network is not secure anymore, that anyone can just print double, they can just basically double spend transactions or print Bitcoin, and then the network is worthless, basically. So, or I mean, not worthless, but it's effectively the same as the current system we have.
Okay, so it would lose its integrity that it was set up to maintain, if that
exactly
happened. Okay.
The units would no longer be scarce at that point, and
okay.
and nobody could trust anyone anymore. So instead, the creator of Bitcoin, what he realized was that, of course, this inflation rate would be decreasing over time. However, we also have to pay a little transaction fee to send each transaction. And what you can think of this as is basically currently right now, miners get the majority of their income from the newly minted coins that are released into the Bitcoin blockchain every 10 minutes. And what you can think of this is that this is inflation effectively, and that means that the people that are holding Bitcoin are actually subsidizing the people that are using the network. So this is a little bit complicated, but let me try to repeat that. The people that are holding Bitcoin, they are actually losing purchasing power over time because of this inflation rate. And they're subsidizing the users of the network that are sending transactions that do not actually have to pay that much to use the network.
Interesting. Okay. All right.
However,
I'll have to listen to the recording here, Demelza, to grasp it all. I want to ask you about Jamie Dimon. Okay, so we all know Jamie Dimon, he's changed his mind, said it was really, I don't know if he used the word fraud or bubble, but then JP Morgan set up a trading desk for crypto at the same time. So my friend Scott asked, what's the chance that Jamie Dimon takes a shot at cornering the Ripple market with the bank's money transfer business? Do you envision any MA in this space?
Wow, good question. I mean, for me, that would be Ripple's only exit strategy. That would be Ripple's only way to survive the future, because, I always thought that if the idea behind Ripple is good, then of course the banks will not just buy XRP off of the market in order to use that. They'll just create their own token where they're the main shareholders, not somebody else. And I think that's exactly what JP Morgan did. And so, possibly there could be a buyout, but I actually think that it's not necessary. JP Morgan can just create their own product, because actually, XRP is unstable. The price is unstable. The volatility is unstable. And if you have to pay transaction fees with XRP, then you're going to be paying transaction fees in a volatile currency. So I think that actually JP Morgan, if they have clever mechanism design and game theorist on their staff, actually I think they could create a product that's probably even better than XRapid.
Okay, Demelza, for people like me that are, have been traders of currency, etc., and that really want to delve into this and learn about it, but, consider me a novice in this, what would be the best way for me to go about educating myself so that when I put money on the line, I really know what I'm doing? Besides reading your reports, any primers that you could recommend to people about crypto so that they could edify themselves before they take risk?
That's a good question. There was a good book that came out. Chris Bernsky. Bitcoin book.
This is the author?
I'll have to send it to you.
Okay.
Yeah, it was there was a book. This one.
There you go.
This one, I'd say it's a pretty good. So Chris Bernesky is some kind of asset manager. He's a fund manager, and they wrote this book, Crypto Assets: The Innovative Investor's Guide to Bitcoin and Beyond.
Yeah.
So they're very good. This is a good introduction, and then of course also the report that I write and the team that I work with here. Anybody can find the report at cryptoresearch.report. So that's the URL, and it's got pretty good. It's not for beginners, but it's for laymen. So we explain every topic in a way that anyone could understand, and we're always happy to take any questions on any content in there.
Well, Demelza, I really want to thank you for being here today, and I hope your subscriber base increases parabolically like Bitcoin did last year. It really was great to meet you, and you're now my trading warrior sister, like it or not, even though you don't trade, but you at times move out of crypto, and I really want to thank you for sharing your time and edifying our community today, and wish you in this new frontier all the success in the world.
Dale, thank you so much for having me on.
It was our pleasure, and keep in touch, Demelza. You're my go-to person on crypto now.
Wow, love the title. Thank you, Dale.
All right, so everyone, thank Demelza. Any last questions? Tom Lano says, great interview, Coach. Scott Henderson, Scott's the one who prepared the questions for me. Thank you, Scott. And Kareem, thanks you. We have part of our population that's very much involved in crypto. So this was a great interview. And I want to thank you once again. Alina says great interviews. So people can follow you on Twitter at CryptoPhD. And is there a subscription fee for your research, Demelza?
Nope, it's always free, and it's available in English and German.
Okay, well, I know a lot of people whose favorite thing to say is, if it's free, it's me. So once again, I think that we found a great resource. Scott, in fact, recommended that I interview you, and appreciate you being with us. Remember, don't just count your pips or cryptos, count your blessings. That's a wrap for us today. And thank you very much, Demelza. And keep in
Thanks.
touch with me. I'd love to have you back.
All right. Have a great day.
Thank you. All right, everyone, that's a wrap. See everyone tomorrow. Good hunting the rest of the day. Adios.